Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
We are doing an update to the Las Vegas real estate market. We apologize for delaying videos. Doing a little traveling.
Okay.
And other stuff. Okay. All right. So what we're going to do is we're going to jump in all the numbers. It's been a while, so the market's changed a little bit in the last month, I think, since we've done an update. Mm-hmm. So the date on this, October 20th, it's just basically Sunday's data, just from a few days ago. Okay, so we'll start over here. Market Action Index. 32 slight seller's advantage. One, does it feel like a slight seller's advantage? You just had a listing go under contract in like 2 days, like in the 400,000 range, right?
Okay, but it doesn't feel like a seller's advantage.
Okay, what does it feel like?
It feels like a buyer's market.
Okay.
Homes are sitting on the market longer in spite of what the data shows. Mm-hmm. Sellers are getting antsy. Buyers have a lot of choices and they don't know if they're in or if they're out. Sellers are having to pay buyers' closing costs. Mm-hmm. Sellers are having to reduce their aspirational prices.
Yep.
So it does not feel like a seller's advantage. It feels like a buyer's market.
Okay. Perfect. Let's jump over here now. We're going to go through some of the data in the real-time market profile. Then we're going to just go through the long-term slides. You can look at the last 5 years. Okay. I want to point out on these real-time market profile, I just picked this one here, median price and new listings. It looks like a lot of movement on this thing. The problem is that that's a pretty narrow band. Those numbers don't move a lot in the 3 months usually. So you can see there it looks like it went up quite a bit, but it's basically just jumping around between like 500,000 and 515. On that, this is kind of normal for this time market. Price per square foot is down from the spring. We'll talk about that. I've got a great chart there. What's really interesting here is inventory. It's what it did is it slowly climbed all summer. Then it kind of ramped up in September. Mm-hmm. And then it just basically has started to fall off finally. Right. The last 3 weeks it's basically dropped. You can see there. Once again on here, if you look at that line, it looks like it, oh my God, it just took off in September, but it's only maybe a couple hundred. That massive rise is like maybe 200 listings. Mm-hmm. We'll jump into that too. And then rents are down a little bit. We'll talk about rental market a little later. Okay, let's start with inventory. The inventory generally is the like softest or peaks or whatever about in October. And we look at this chart here. This is the inventory chart. You can see that we have more inventory than the last 2 years. Less inventory than 2022. If we could go back to 2019, we have a little less because we had a little over 5,000 at this time, 2019. What's interesting is if you go back to 2021 and back there, we had very little inventory right now. And then we're kind of getting back to a normal amount of inventory. Does it feel that way? Because the numbers right now is like 4,700 houses for Las Vegas on the market. A little more than 1%, like 1.3% of all houses are available for sale.
So, yes, there's inventory, but not enough to satisfy the buyer's interest. And notice I said interest, not demand.
Okay.
Okay.
Tell me more about that.
Okay, so we don't have enough inventories to satisfy buyer demand if they were interested in those homes.
Right.
But they're not interested in those homes. Those homes don't meet the needs of the buyers that are looking.
Yeah.
So homes that meet the buyer's needs, that means that those homes are priced properly, they're in the whatever geographic area that the buyer wants to be in, they have the amenities that whatever the buyer wants and that sort of thing. So the homes that buyers want, there are very few of those, and those that exist, they actually sell relatively quickly. So I was chatting with somebody over the weekend, and they were in a multiple offer situation, and I think the list price was like $2.5 million. The property had just come on the market over the weekend, and they already had 3 offers, and the house was going to go. And that's a perfect example of a home that is priced properly, and it's a product that people want to buy, as opposed to the properties that are sitting on the market and no one is even looking at, let alone making offers on them. And that's because those are not homes that people want to buy. There are very few buyers for those homes, and that's why those homes are not getting any visits.
Yeah, we have seen $2 million houses that literally get 3 or 4 offers within the first day. Mm-hmm. And then we've seen $600,000 houses that are not getting offers, probably because they're overpriced or some other issue.
Right. But look, and that's across price points. So I don't care if you're a $200,000 condo, a $400,000 single family home, a $2.5 million home, a $12 million home, whatever it is. So long as that home is desirable by enough buyers, you're going to get that home sold quickly. If you have a small buyer pool for that home, that's going to take a while before the right buyer comes along.
Every one of the last 5 years, basically from this time in October, the number of available homes available anytime in the MLS has dropped all the way to basically May. So I expect we'll see that again. That we're going to see that. Here's price per square foot. Here's the most interesting thing on this chart that I want to show you. If you look at, it looks like it has a little sine wave. Even though at one point in 2022, we had a big run up because interest rates changed. So a bunch of people rushed out and bought houses, kind of weren't price sensitive, right? Because they were still going to get their 3 or 4% rate. But they knew that if they waited 4 or 5 months, interest rates would be 6-7%. So basically everyone overbid. That was actually a great time to be listing agents because literally everything got offers within an hour of going in the MLS, right? What's interesting on this chart is every place you see a convex shape that points down or down into the right, the peak of that is like May. So if you look at 2022, that little peak is May. If you look at 2023, where it sort of levels off, where it's starting to level off, that's May. And if you go to this year all the way to the right and you see that hump where it's the highest, it's May. Now remember, that was the highest, if you look at this chart, this was the highest per square foot we've ever had in Las Vegas. This shows that spring to fall relationship where prices tend to soften in the fall, then they go back up in the spring. Of course, we don't know what's going to happen next spring, but I thought this was a good representation of that. The other thing too is this is sort of the time of year where the price per square foot stops dropping. Sometime between now and December starts going back up again. You think that's, like with everything you are seeing, do you think the weakness, because this is the weakest market we've had except for 2022 in the last 5 years, right? 2022 was weak only spring to fall because a year later home prices were more.
Right. So it is a relatively weak market. However, like I said, the product matters. So Is Luxury had an open house extravaganza about a week ago, and the amount of traffic in these open houses was incredible. It was multiple open houses in one community, and the traffic was incredible. Lots of people went through, and it was interesting because there were lots of what I call accidental buyers. And what I mean by that is these were people that weren't necessarily looking, but they didn't know that these homes were available for sale. They were invited because this was an invitation-only open house. They were invited from surrounding communities. They came, they saw these homes, and there were offers put on these homes. So it was a really interesting thing. So there are all these hidden buyers out there besides the ones that are actually out looking. And that's what I mean by these hidden buyers, these accidental buyers, people who didn't know these homes were available, weren't really thinking about buying a home, but when they see the right home, then they want that home.
Average days on the market on this chart. The interesting thing here is for the last 2.5 years, going all the way back to probably March of 2023, it's been pretty consistent. If you go to the left half of this chart, you'll see it was much less, but remember that was sort of the post-pandemic, still low interest rates, frenzy buying, offers happening really fast. Homes, the average number of days on the market was very low. Here we have the average number of days on the market really hasn't changed that much. So I just thought this was interesting too. But, like you said, Wanda, we just took a listing that, it was on the market, a couple days, and we got offers and it sold. It's under contract, right?
Right.
But so we've had other listings where it's substantially overpriced. Like, we just want to get 800 even though we know it's for 725, right? So we'll just list it for 800,000 and see what happens. See if somebody from California accidentally oops, I just overpaid by $75,000.
So people don't overpay for homes, okay?
Right.
People are well informed, and there's so much information out there that the idea that a buyer is going to overpay for a home really is not a very realistic idea. So I think it's important that people remember that homes need to be priced appropriately in order to gain buyer attention and get buyers to come take a look at them and maybe even make an offer.
Okay, that last chart I showed you was average days on home. It's skewed by homes that are on the market a long time. So if you have 2 homes on the market that sell in a day and then one that sells in 90 days, the average time on the market is going to be like 30 days, even though it's not really the average. The median would be 1 day. So that's why, and median is always less. Median is always a lower number. On this chart, this is the 4 market segments. There's 2 important things on here. One is the what I've circled in red. This is the new homes that have come on the market and homes that have been absorbed. Now, absorbed means went under contract. Doesn't mean they sold. That is, some of these will fall out. So they won't all like close. So, but they're still pretty strong numbers. And if you look at this, I mean, this actually surprised me. I didn't expect to see this. I think this is relatively strong for being in what I would call, like if you look at the last 5 years, this is probably the second weakest fall that we've had in Vegas. And the other four years have been much stronger. But I was honestly surprised when I saw this, that so many, especially in the bottom quarter of the market, 135 absorbed, 98 come on the market. That's where our most recent listing is in that. There seemed to be a lot of demand in that price range. And then the other thing one is these days on the market. 63 is the median, so that means 2 months, which is not unrealistic. Then 70, 77, and 98 for these high-end homes. But I think the high-end homes are the same thing. They either sell really fast or they just end up sitting around, right? So what do you foresee here with when you see these new homes coming on the market, which are new listings, and then absorbed, and the days on the market, there may be, the numbers don't seem as bad as it sort of feels, because it seems like there's more of a negative sentiment than because the numbers are not fantastic, but the numbers are not wholly terrible. Like I think the national numbers were that Vegas year over year was down like 1.2% year over year, which is not normal. Normally we're up a couple percent year over year, right? But the numbers were not absolutely horrendous when we looked at these. So why is that? Why is there a different sentiment than the numbers show?
Well, so sentiment doesn't always reflect reality, right? Because sentiment is a feeling versus what numbers bear. And a lot of it is the information that people consume. And so the information may be less than positive between different economic news and different political news and different things happening in the world and that sort of thing. So all of that weighs on people's minds. And so that goes toward that sentiment that goes beyond the particular topic, and it kind of tends to cloud people's outlook throughout throughout everything that they're evaluating, including housing. As far as interest rates are concerned, interest rates have been coming down, and they're probably going to continue to come down. I don't expect that they're going to plummet. I do expect that they'll just creep down ever so slowly, painfully slowly for some people, but they will painfully slowly creep down. Across the board, interest rates are below 6%, and that's a good thing. Now, as far as what I see for next spring, I think next spring it's going to be a busy spring because we're going to be catching up for all the transactions we didn't do this year. It's been a very slow year for transactions. So I think that next year we're going to probably play a little bit of catch up. So I think it's going to be a robust spring with lots of transactions.
Let's really quick. These are the market rates we get from a lender. They may not be the median you're seeing for median Freddie Mac. They probably are 720 credit score, something like that. 30-year fixed conforming jumbo 5.875, 30-year FHA 5.25, 30-year VA 5.25, under 5% if you do 15 on the VA loan, which is pretty substantial. So do you think if 6 months from now, if we see these core rates go below 5, right? If you can get a 30-year for 5 or just under 5, or 4.5 on a 15, how does that look? Because a lot of people out there are like, they're going to make a purchase. They don't know when it's going to be. Or they're going to make a sale. They don't know when the sale is going to be. And they're trying to time the best time of year to sell, the best time of year to buy. Is it possible they get to where if they wait 6 months or a year, interest rates are down, but now home prices have gone back up again, and maybe the house they wanted, there's multiple offers on. Like, what does that look like?
Well, to me, it's kind of like playing baseball.
Okay.
You know, you have to swing at the exact right moment at that sweet spot.
Yeah.
And, you know, because you don't purchase houses every moment of every day, the same way most of us don't swing a baseball bat, 1,000 times a week. It's the same kind of thing. The idea that you're going to catch it just right is nearly impossible.
If you could go back to 2010, 9, 10, 11, when home prices absolutely bottomed in Vegas, would you go back and buy 40 houses? Would you do anything different? We were flipping houses back then, so we weren't acquiring houses. We were doing flips like crazy, lots of flips, because there was money in all the flips. So it didn't make sense. You could take 20, 30,000 out of a flip versus getting $1,000 a month in rent, right? And it made more sense to do that. Would you still make that decision, or knowing what you know, would you just said 40 houses? And how would you use that information today? Because there's a lot of people out there that watch this. Some are investors, they have a bunch of houses. None of our investors that we know of are selling houses. Everyone's holding on to the houses. But how do you decide when to sell, when to buy based on all of this information?
So I think it's less about the market and more about your individual situation. I mean, honestly, we all make the best decisions we can in the moment based on the information we have at hand in that moment. And hindsight is great, but we all make the best decisions. So we made those decisions back then based on the information we had, and we did fine with what we did. That's kind of it. I don't know that I would say that if I knew then what I know now, would I hang on to those homes? Well, maybe I would, but I wouldn't be able to hang on to 40 homes either. Right. So that's kind of the thing. Well, was I still better off flipping? Maybe. I don't know. I'd have to put pencil to paper and figure it out.
Okay. Anyway, any general Vegas news? So casinos are on track to have a record year for revenue, and the Las Vegas Visitors Board just came out and said the next 18 months will literally break all records. There's been less total people coming, but they're getting more revenue out of them. Right.
And remember, when they're talking about gaming revenue being up and breaking records, keep in mind that the majority of the casino's revenue is actually not from gaming. It's actually from retail and restaurants and hotel and other things. So that really lets you know how profitable these corporations have become.
Yeah. Just thought that I'd throw that as a general, I keep every, 6 months, it's, that everyone's going to get laid off and there's not going to be any jobs here. And, so.
Well, Las Vegas is very good about weathering all sorts of economic conditions and doing well. And I expect that it will continue to do so.
Okay. That was it. Solved the data.
Okay.
Yeah.
So please remember to like the video, subscribe, hit the notification bell, share your real estate related comments below. If you like this type of video, let us know. If you'd like a different kind of video, let us know as well. And we'll keep that in mind as we make future videos. Thanks for watching, and we'll see you on the next video. Bye.
Bye.